Hey everybody, welcome back to the Financial Thing Weekly, Thursday evening if you're in the UK, Thursday afternoon if you're in the US, and tomorrow sometime if you're in Australia. Good day to everybody over there. It is the week from financial ups and downs, I would say. It's been a testy week for especially crypto investors. The stock market has managed to maintain its composure, which it usually does when cryptocurrency markets are having problems. So we're going to talk about that a little bit later. We're going to look at the peer-to-peer lending news. It's been really, again, a very, very quiet week on the peer-to-peer lending front. If you didn't check out last week's live stream with Jan Marciano, who is the CEO of Blend Network, it is on the channel archived. I had a good chat with him. Really impressed by what Jan is doing. Gosh, I should probably do this up. little low buttonage there for a Thursday evening, huh? And yeah, we got a lot of good things going on. We're going to talk about what's going on with the house crowd, Mr. Fraser Funhead defending himself, and what's going on with the investment action group. So we got, of course, the Funding Secure Action Group, Lendy Action Group. We got the Wellesley and Co Action Group, now a house crowd action group. So investors coming together to protect themselves about what is going on with these administrations, these companies that have gone into administration and are having problems, which if you are a lender through any of these companies, definitely advise that you sign up for those action groups. You can find most of them on Facebook. And also, if you want to join the House Crowd Action Group, which I have signed up for myself, I'm going to go ahead and put that in the chat. Here's the link to the let me type that in. House Crowd Action Group. Definitely recommend. Look, I mean, nothing else. You get represented by people that really know what's going on in these situations. But if you can do me a favor, hit that thumbs up before we get going. It helps with the YouTube algorithm to let people know that the stream is happening, and subscribe to the channel. Hit the thumbs up, hit the subscribe bell. I appreciate your support. Thank you for joining me here tonight. We're going to talk about peer-to-peer lending. We're going to talk about cryptocurrency. We're going to talk a little bit about fees. I've been getting a lot of emails this week about the best way to buy shares and index trackers. How do you find the lowest fees, the lowest platform fees? So I have a tool that I've used in the past I'm going to show you, which can really show you the best way to do that for most of the platforms. And we're going to go through the fees on Fidelity and Vanguard and how they differ. If you want to buy index tracker funds, they do differ a little bit. But we'll go through those. And it's not always very easy to see on some of those websites how they charge the fees. But let's go ahead and give a quick shout out to everybody on the stream tonight. We got Dave Dawson first, our dividend guy, Colin Perry from the Peak District, Vince from Leatherhead. He said, finally managed to doge in and out of the rain showers. I almost thought that you wrote Doge, like Dogecoin, but you actually wrote Dodge. That would have been good. Hey, Debbie and Nigel in sunny Cayman Islands. What's going on down in the islands? Alan Stratford is here. Good evening to you. Thanks for joining us. John Morgan from Blustery Swindon. Alan Lomas from Chesterfield. John Morgan, who says, wasn't crypto fun this week? Absolutely. It was a great time. I enjoyed it. Everybody else was panicking, and I enjoyed that. But we're going to talk about that a little bit later on. We'll get our crypto fix in at the end for anybody that's interested in cryptocurrency and why you'd want to invest in it. This was a good week to know why. Paul Bagworth from windy and rainy Kenilworth. Evening from Crete. Robert Pates. Annabelle, of course, over in Spain. Hola a todos. ¿Cómo está? And Albert Adams is here. He says, I wonder what comments will be on Bitcoin. It is interesting. Yeah, let me know what you think about what happened this week. We had the flash downward spiral this week. A lot of people panicking. Was that something that you were, if you're a Bitcoin holder, nervous of? Personally, myself not, but we'll talk about that. Stephen Green in Southport. Annabelle says, you and I both on the orange list then. Yes, I think we are. Keith Morrison, Lincoln. Hi, Mike Powell in Southampton. And Paul Bagworth says, we nearly needed a Bitcoin action group. If you have questions about any of your peer-to-peer lending concerns or investment things, put them in the chat. I'll do a Q&A at the end if you have anything you want to know about. We could talk about cryptocurrency or stocks or tracker funds. Also, I'll give you a quick Trading 212 update, show you what's going on with that. Tony Walton from a wet and windy Somerset. And yeah, so thank you everyone for joining us. I think my friend Joel from London may be watching too, if you are Joel. He's a good bloke. He's a good bloke. A guy I met on the plane, and we become friends ever since, talking about cryptocurrency. He's been in the markets for a while, so we have some very interesting discussions. So, and don't forget, this week we are sponsored by Cufflink here. You can sign up today and receive up to $4,000, 4,000 squid cash back on your first investments. Terms and conditions apply. Your capital is at risk. Join.cufflink.com/financial.thing if you don't have a Cufflink account. Check that out. Thank you for them for supporting the YouTube channel and the Financial Thing website. So, what do we got this week? We had a jump in loans on Loanpad, as I've always said. I really keep an eye on Loanpad because I think it's one of the better products out there in peer-to-peer lending, and they are expanding their loan book incrementally. They're not doing anything crazy. It's been just kind of inching up, and we saw a jump up to £28.8 million loan books secured by £62.4 million. They went up about 7 loans since I checked a couple of weeks ago. So at 71 loans 2 weeks ago, up to 78 loans. So you can see that incremental increase, which is what I like to see. I don't like to see these big jumps of loan books like really extending very fast, because I think that just shows steady growth of what Loanpad is trying to do. Still only 1 defaulted loan and 8 extended loans. We got an average loan to value of £369,000 per loan, which is 41%. So keeping it very manageable, and the interest coverage fund has pretty much remained the same. So they're just still doing what Loanpad does. Slow and steady wins the race. Happy to stay invested with them. Let's go ahead and see what's going on in the news this week in the peer-to-peer lending news. If you haven't been to the website recently, I put up a new Lending Works review that's updated from what's going on, and here is my single stocks versus tracker articles. If you have any queries about where to buy index trackers and which ones I personally buy, there's a really good article on the front page of Financial Thing, and it shows you the 2 trackers that I recommend going into: the US index tracker, and to hedge some risk with the bond tracker. As interest rates start to inch up, I think those bond trackers will do better in the future, but right now it's more of a sort of like a gold play, to really hedge that downside risk if the markets do correct. Stock markets are kind of frothy right now, and we don't know how long that's going to last for, but check that out. So news this week, let's see what we got. Funding Circle shares rocket on raised earnings guidance. Funding Circle has been very involved in the CBILS lending, and so their shares have done well because they have managed to create a lot of income by doing those government-backed loans. Question is, what happens when that kind of relief ends? What happens when those loans are not offered anymore by the government? Where does Funding Circle go at that point? Will their profits continue to rise? You can look at their share price here. Is really, if you looked at it on a short-term basis, you might think, oh, it's not bad, right? 160, we saw the low point start to drop down here, 143, and then we had that bump, If you are a Funding Circle shareholder, which I don't think anybody on this stream is, it doesn't look bad until you go into the max time frame when Funding Circle IPO'd at 440, and you've just seen this really big drop off down here. I think it went as low as we were in the 44.2 during the March market correction of 2020. So took a real hammering from the IPO price and sort of just been middling along right here, not really doing anything. And then we've had this bit of an uptick, but you know, Funding Circle shares are not something that I think would be a sound investment unless you were able to time the market really well and get in at this 44p point. If you had, you know, the courage to do it, then sure, you could have 4x'd your money, but you know, was anybody really buying Funding Circle shares when the market was crashing? Probably not. Probably not. You can see here over the all-time since the IPO that the shares are actually down 63%, but has had a decent 6 months, up 80% if you manage again to time the market perfectly, which is very difficult. So yeah, Funding Circle, you know, seeing this big uptick because of the CBILS lending, and also in the US, the PPP scheme, which is very similar. They're loans that were government given subsidies to businesses to help through the coronavirus issues. Here we go. FCA's collateral investigation nears conclusion. So the FCA has been investigating collateral, including a potential hack into the regulator's register. I mean, this collateral situation has really been a mess. I think at most now investors are thinking the money is, they're not going to get their money back with that. And I don't know that this FCA investigation really helps anything, rather than waste time and money, or taxpayers' money at some point. But there were some very shady things. Collateral told prospective investors it held an interim position for regulated activities, and the FCA's register showed this appeared to be the case. Someone changed the name on Regal Pawnbroker, a separate business where Collateral's founder was a former director, to make it look like Collateral held the permissions instead. Now, you know, here's the funny thing. I wonder if there's a case for compensation through the FSCS. Of course, FSCS does not protect peer-to-peer lending investments, but we've seen with the London financial bond what's happened. We've had there's going to be a payout through the FCS, which for a mini bond is not an FCS protected product. So I'm wondering if due to that there are some cases for FSCS compensating peer-to-peer lenders for these companies that probably not this one, probably not Collateral because they weren't FCA regulated, but maybe some of the other companies that went into administration who maybe falsely advertised certain things, company specifically Lendy. Maybe they falsely advertised, falsely gave information to potential customers that were on emails. Maybe there's some case there for some kind of compensation. We'll see. But yeah, the FCA is doing this investigation. They haven't really released any information. I'm not sure really what's going to come of this investigation, but at least they're doing it. Rathi says he is broadly comfortable the FCA reflects all current participants in the market accurately as an investing very heavily in the register to continually improve the data integrity around it. And he says, just because a firm is on the register, it doesn't mean you get a full level of protection. Yeah, don't we know that? Don't we know that well? That's the FCA chief, by the way, is Nikhil Rathi, who's made comments about what's going on with that investigation. So, yeah, we'll see what happens with that. Next, we got the House Crowd chief disputes unauthorized loan allegations. So apparently there was some questionable loan that Fraser Fernhead took out through the company for himself. I think the amount was about, down here, £390,000. He says it was secured in accordance with the published underwriting policy at the time, though that policy later changed. He said that by February this year, $315,000 had already been repaid and was due for redemption at the end of February. He said he has the money to repay what is owed, but he has been waiting for a redemption statement for over 2 months. There's a lot of kind of back and forth here. There is a company called Inquitivo. That name is just so difficult to pronounce. Inquitivo was a financial consultancy firm that was engaged by the house crowd to provide advice on risk and regulatory matters, and that was actually Andrew Holgate, who was one of the Assets Capital founders, was involved in that company. And that company, Equitivo, there we go, Equitivo, were making some suggestions that the house crowd should be put into administration for certain breaches of terms and conditions and problems that they were going through. And it just seemed to be like this back and forth boxing match between the company that the house crowd had engaged to help them, and then what probably happened, and again, this is just pure speculation, what I read, is that they started to find things and some red flags within the company and probably suggested that administration might be the way to go. Now, as a company owner, Fraser Fernhead decided, hey, putting a company into administration is not always the best thing for investors. So do we actually want to do that? So now they're jarring back and forth, and there's some allegations about some wrongdoings with this loan that Fraser has taken out. And what Fraser Fernhead wanted to do is to put the house crowd on a shoestring budget in order to get through the issues that they were having due to the COVID downturn and probably the pauses in the development loans and the developments that the house crowd are actually doing themselves. But that ultimately didn't happen, and instead of operating very thinly, they went into administration themselves. So again, if you haven't joined the action group for the house crowd and you're an investor, I put the link in the chat. I'll put it in the description too below, so you can join that if you want to. So they're going back and forth. This is the information again about the house crowd investors that have set up the action group. And what they'll do is they'll work to try to recover funds on behalf of investors from the house crowd platform that's in administration. Investors are owed £52.7 million in capital and interest. And unfortunately, what we've seen in the past is that a very small percentage of that tends to be recovered through administrations, because the administrators eat up most of the recoveries and fees, unfortunately. But there is an action group. Again, if you want to sign up, it's I'll put it in the chat one more time. So you can sign up for that, because it's a good thing to be a part of. That is in the chat right there. Let's see what else we got here. See, this is the report of the £120 million LCF, London Capital and Financial mini bond payout that will be given to investors. Now, some of the investors are still going to lose money because there was £237 million in losses when LCF went into administration. So £120 million will be paid out by the FSCS, and they're going to administer that. We'll see again how that goes. That's a shame. Things do happen. There is always risk in investments. So if you think that mini bonds are safer or bonds are safer, sometimes they're not. Corporate bonds can collapse the same way that a mini bond can. But it's good that they're getting paid back some of the losses. This is definitely not a normal thing when a company goes into administration like that. They tend to not to pay out that kind of money, but this is a good outcome. This is a good outcome for anybody that was invested in the LCF mini bond debacle. So apparently FSCS has been investigating London Capital and Financial for over 2 years. Yeah. And again, maybe this will set a precedent for some other FSCS payouts that could happen with some FCA authorized companies, because, you know, the FCA did authorize these companies to operate and they're supposed to be the watchdog over them. Sometimes they fail, but we'll see what happens with that. So again, this is just an old story. I was just getting myself up to date on the London Capital and Financial, because it has dragged on for a couple of years, and I wanted to see how that thing was playing out. Yeah, it's really an interesting one. I remember a few years ago, it was probably about 5 years ago, just when I started the website, I had a reader that actually emailed me about the LCF bond, mini bond, and said that they invested and they were thinking about putting more in. And when I took a look at the mini bond, I was very, very, very wary of it and skeptical. Turned out to be a lucky skepticism on my part. I didn't really know anything about the company back then, but I just taken a look at their mini bonds and thought, it's looking a little hairy. Next, we got Lendy and Funding Secure Action Groups have asked for the backing of the members. The Lendy Action Group and the Funding Secure Action Group, again, you can find those on Facebook if you search. I'm sure most of you are already in those if you've been invested through these companies. But they've asked their members to sign their backing to future letters with the Financial Conduct Authority, that's the FCA, the Treasury, and other groups by the 17th of May. The action group said that the correspondence has more weight if it's supported by a united group rather than individuals. So they want to get everybody's authorization for the action groups to speak on their behalf, and that way they can sign the letters from everybody inside the action group rather than just the representative members, and maybe only 3 or 4 of those. It just holds a lot of weight. So if you want to send your support, you can do that. There is an email. I'm going to put that in the chat. And they ask that you put in your first and last name and just write that you give full support to the Funding Secure Action Group and Lendy Action Group. And very, very simple. You can send that in an email to, whoops, not that. Let's go ahead and put it in the chat here. So go ahead and sign up for that if you haven't already. Anything you can do to back these, these action groups is good. They're volunteer groups. I mean, the people that work behind these to help investors who have lost money and companies that have gone under, they're giving their time up to you as a volunteer. So anything we can do to help them is definitely a good thing. Crowd Property has entered the Australian peer-to-peer lending market. So Crowd Property obviously is doing quite well in the UK, and now they've got a Australian arm. Now, if you're an Australian and you want to invest through Crowd Property, you can do that. So that is pretty cool. Mike Bristow, who is the CEO of the UK arm, will sit on the board for the Australian arm of Crowd Property. This one kind of scared me. £2 billion of CBILS loans were backed by personal guarantees. Now, the way this was written, you'd think it was a good thing. But, what happens when these companies have taken out all this money in loans from the government, from the CBILS lending, they can't pay? Well, all they are is backed by a personal guarantee, most of them. And the average loan size has been £774,389. Now, you as a taxpayer, obviously this is made up of taxpayers' money that's being lent out. And it's going to be interesting to see, how many of these loans actually go into default in the future, and what is the recovery option on these loans. You know, I mean, if you are just talking about personal guarantees, we've seen through certainly peer-to-peer lending that personal guarantees really not really worth the paper they're written on. If somebody's faced with a default and the worst thing that happens is their credit gets banged up, then, you know, it's not like they're going to lose their house over it. They don't pay on the loan, the credit gets knocked, and yeah, it's not hard to walk away from a loan when that's all that's going to happen to you. So they've had a study by Purbeck Personal Guarantee Insurance, and they found that the average value of a personal guarantee backed CBRS loan was £774,389. Based on that average loan, if the business has minimal assets, the owner could need to pay back close to £154,877 to the lender. So they only have to pay a portion of it back because the government takes care of the rest of it. But is somebody really going to make an effort to pay back that money if all they have is a personal guarantee that they're facing loss on? I don't think so. I don't think so myself, but you know, hopefully these loans won't fall into trouble. I have a hard time believing they won't, but I guess we will see what's going on with that. What else do we have? Yeah, again, it's been a really quiet week. Peer-to-peer lending, there's just not much. Lendery, I'm still working on getting that set up. I know I say that every week. Let's take a look at the trading 212 portfolio. It was kind of a rough week for the portfolio, but it's bounced back a little bit. Let's show you what's going on here. Log in, give you a view if you haven't been following this. This is a £5,500 investment that we're trying to take to $1 million. No, that's actually not true. Just trying to beat the index trackers at the moment. You can see right now we got an account value of £11,784.77p. We've done pretty good. Yeah, it's really been held up by these two main investments here. Laredo, obviously oil is something that I've been focusing on, and commodities I think are going to do good through the end of the year. A lot of reports that oil would be anywhere from $80 to $100 a barrel, and if that's the case, these oil companies are going to do well, and the power companies are going to do well. What's going on? So we got this Aurora Cannabis has been a bit of a thorn in the side, down 40%, and Bonanza Creek Energy had a good week with them, up 37% total. You can see here we have in the last week risen a little bit up here. There's been good reports from them as far as earnings have gone, so they've had a good week. Centrus Energy were down about 19%. Ceres Power down almost 9%. And then Laredo, the big one, up 73% from where we started. You can see here the beginning of the month we were at $34, from now up to $49, so that oil play has done well. And the good old darling Lloyd's Bank, I mean, again, I would never have thought that Lloyd's would perform well, but the price paid was so low, 24p, almost doubled on those. Seems like a solid play, probably just hold on to those. This was a blunder here. Microvision, 37% in the red, 37.5% in the red. Yeah, a little bit of a technology play there for LiDAR, which is automated driving, which I think is going to be a thing for the future. It's just going to take a while for these automated cars to really perform correctly, and the idea in the future is to have them completely autonomous so you don't have to do anything. But these LiDAR companies are very risky plays that might break through into developing something that can be completely autonomous. So yeah, down 410 pounds on that, so 37%, not a great buy. And then Tullow Oil, our little UK oil and gas exploration, I put a little bit more into that, and we're currently in the red at 4.79%. I think as oil and commodities do better throughout the 2021, you'll see all of these power and oil holdings do well. Microvision, I don't know, that may be a dumpable stock at some point. But, you know, I always say the only time you lose money is when you sell. So sometimes it's better to hold. If you're a crypto person, that you would have experienced that this week. Let's talk about a little bit about the cryptocurrency, what happened this week, what's going on. We had a big dump. For anybody that's followed the crypto market, the sky was falling. It was panic. There was blood in the streets. Everybody thought Bitcoin was going to go to zero, and a lot of people panic sold, which was a huge mistake. Panic selling is never a good thing, but you can see we went all the way down here. We were at 30,000, but this is actually not entirely correct. We went all the way down to $30,000 at one point, and then took a big bounce back up. By design, I think a lot of that was market manipulation. A lot of whales that control the crypto markets want the price to fall to rebuy, and you can see the bump we took up from 30,000 right back now to, I think we're 39. We're almost back to 40,000. Today we had a big huge dump and a big huge pump, but you can see the cap right now is still $1.8 trillion of cryptocurrency in this market, which is huge. And the Bitcoin dominance, which is always something interesting to pay attention to, that is, Bitcoin is 42.2% of the whole market and Ethereum 18.3%. You saw Ethereum too, and I got a ton of emails this week saying, oh, Ethereum, what's going on with that? And if you just, again, you look at the 1 year charts from where we were a year ago in the less than $200 range, and then we had this huge run up to 4,125, and then right now we're almost touching again $2,810. So really, essentially, what Ethereum did over the last 7 days was wipe out a month of gains. So perspective is important if you're a cryptocurrency dabbler or a long-term investor, that you know these drops are going to happen. Whenever a piece of bad news comes out, these drops can happen. They can be volatile drops too. But what you don't want to be doing is selling in these down periods. If you can time the market and you manage to sell up here, great, more power to you. I don't do that because I'm a long-term holder. Now, I think it's okay to take profits. I think if you take out your original investment, take out some profit on top of that, there's nothing wrong with that. Don't forget you're going to be forced to pay some taxes on that. But for the most part, what happens is your average investor, he's gonna see the market dropping here, right? This is really what happened when we saw it sort of starting to flutter around 3,800 US dollars, then down to 3,400. This big drop right here that we saw is when people panic sell. So we dropped 400, and then from here 2,900 all the way down. This is the selling, the panic selling, down to 2,286, and we saw a bounce, kind of like this W shape, and then all the way down to $2,214. And on Coinbase, actually, you saw the price dip down to as low as 1,800, which is a huge drop. But the people that held and didn't panic sell got to see this rise back up again. Now the problem with selling is you don't know when that time is to get back in. If it's something you really think is a long-term hold project, then when the emotions are taking over and you feel like, oh, I'm selling, when do you get back in? Do you get back in at 2,200, 1,800? Do you feel like it's going to go down to 1,000? It's very emotionally difficult to pull that trigger. So that's why you're seeing these huge dips from people panic selling. You'd be very careful with that. And there was some amazing buying opportunities. I posted on the Facebook group a couple of, I think it was yesterday and the day before, that I'd been buying through this fall. I bought at 52,000. I bought at 45,000. I bought at 40,000, at 36,000. Because I'm a long-term holder, I'm not trying to move in and out of these, especially of Bitcoin and Ethereum. But you know, you really have a couple of options. If you bought at the top of the market when Bitcoin was 60 grand, what are your real options? You sell at a loss, you could take a tax loss position on it, or you just hold it and wait. And Bitcoin has seen these types of drops over and over and over again since things really started to move. We saw it here at 16,000 December 2017. We saw the drop down to 9. Then we saw the 9,000 drop down to 6. It doesn't look like a big drop here because the chart obviously is stretched out a lot. And then we saw again this spike here at 7,000, back down to 6, and then back down to 3. So, you know, if you've been a Bitcoin watcher for a long time, this is something you become used to. It sort of makes you numb to it. And you understand, you know, sometimes things are going to take a while to recover. So if we look at when Bitcoin was 11,000, it took, so that was July 4th, 2019. Fast forward to January, right? February, March. So we really saw nothing happening for a year. It was still under 10,000 a year later. So we've seen times where Bitcoin can be stagnant. But if you're somebody that buys and holds, then you'll get to experience this point right here. So if you'd have bought back here in 2017 at 17,000 at the top, you get to experience this. This is the Bitcoin adoption phase. And we saw this huge run up. And then we're really seeing right here is the flush out of the markets, right? So things like leveraged traders who were getting liquidated, who were taking very high risks on their trades, they were getting flushed out. And that's what the market needs. The market has to go through these flush out periods in order to get the retail investors to wake up, stop it. You know, a lot of people are investing in these crazy high risk coins like Doge coin, Shiba Inu, all of these silly gambles, which, you know, by the way, Dogecoin obviously started out as a joke, and maybe it will turn into something else. You know, things develop and there's use cases for it to turn into something else. So it could be used as a payment system in the future, but it's like you're buying shares in through seeders in an investment startup company. You don't know what's going to happen to this coin. Likely it's a big gamble. But some of these other coins have really actually are being used for things, and they have use cases. Like Binance coin is being used to pay for fees on the biggest trading platform in the world, on Binance. Ethereum is being used to pay fees on through companies that do NFTs. So it's an actual business that's being used. Bitcoin is a store of value that's very, very well known. Then you've got these other projects that are just starting to really develop, and, you know, who knows what they could be. They could fail. Cardano is one that a lot of people talk about. There's a big ecosystem of companies that are going to be intertwined with Cardano, but it's still relatively early days for them. So again, more of a risky project. You can look down here, Polkadot, a payment system that has real use cases. And then some of these other things, Uniswap, people are moving from one coin into another coin, and they're paying a fee to do that on a website like Uniswap. So some of these, again, you got to ask, what are these actual coins used for? Are the companies making any money? Solana, another one that I like, a payment system. Matic, Stellar could be used as a payment system. You're seeing a lot of these payment coins that be used for payments high in this list because they have real use cases and they're being used. And then if you go down into the riskier ones where people are looking to make 10 times on their money, 100 times, these are just, they could hit and they could miss. They could go to zero. They could crash. I think what you're going to, and I still say that you're going to see $100,000 Bitcoin by the end of 2021. I hope I'm right about that, but I think you're going to see a lot of investors who are going to get burned on these risky coins. Like, look at what I see, Shiba Inu. Ridiculous, right? They're going to get flushed out. And what will happen is all of that money will pour back into Bitcoin and Ethereum because people will get scared and they'll realize that Bitcoin is more of a stable, even though, of course, it's still going to have volatility, but long term it's considered a digital store of wealth. Think of it like digital gold. All of the money that's in these risky plays down here that could or could not hit will start pouring into Bitcoin eventually. And then this is what's going to make the price of Bitcoin eventually take off. No, it was hard to buy into Bitcoin when it was 60,000, so it needed to have that price flush in order to get its next run, which could be $100,000 by the end of the year. There's a lot of fake news this week, a lot of news that I think had something to do with these big crashes. JP Morgan, one of the ones that was saying, institutional investors ditch Bitcoin for gold. They released that on May 19th. And then, as I said on the Facebook group, this is also a company that has settled numerous lawsuits for manipulating precious metal markets. So, of course, they have a vested interest in reporting things like that people are jumping out of crypto to go into gold. Do you trust them to give you real information? Now, how do they get that data so quickly, right? They all of a sudden, so this happened in one day, and all of a sudden they know exactly what's going on in the institutional investors market. They say ditching Bitcoin for gold. So this was another interesting story that hackers got $5 million in Bitcoin as a ransom when they shut down this Colonial Pipeline, oil pipeline in the USA. And I just honestly don't buy this story at all. I don't buy it. If you shut down the biggest pipeline in America, we're talking about millions of dollars, millions of barrels of oil that is stopped. Are you asking for $5 million? I don't buy it. I think if you shut down a pipeline like that, you're going to ask for a lot more than $5 million. And I think that this is some false news. Maybe this number is not correct. Maybe it was $50 million. Who knows? But I think the hackers would have asked for a lot more than $5 million for such a major hack. So there was that. We saw this whole thing about Tesla. Why did Tesla say they weren't going to take Bitcoin anymore as payment for cars? By the way, they'd only taken, I think the report was like 17 or 18 cars people had paid for with Bitcoin. But this was the reason. They wanted to seek entry into U.S. renewable fuel credit market, so they want to get a government handout fuel credits. If the government thinks Bitcoin is a dirty mine currency with the electricity usage, then they probably wouldn't have been able to do that. So they got to put out this stoppage to accepting Bitcoin. Of course, there's always a reason behind everything to why these things happen. And as far as I can tell, Tesla is still going to continue to hold its Bitcoin on its balance sheet at this point. I thought this was interesting. There was a research, Forbes, actually NASDAQ reported this. There's been a research report that shows Bitcoin consumes less than half the energy of the banking and gold industries. Banking or gold, not together, combined. So the study by Galaxy Digital found that Bitcoin consumes 1.13.89 terawatts hour per year, while the banking industry consumes 263.72. So that's double. Same with gold. Yeah, gold 240.61 terawatts per year in electricity. So banking and gold combined, we're talking about over 500 terawatt hours per year versus Bitcoin's 113.8 now. And also, one thing, and two, by the way, this report is actually very interesting. You can, if you Google the NASDAQ article, you can see a link to the actual quantitative study that has numbers in there and shows the report. So people are always saying, where are these numbers coming from? It's in the report here. But the thing is, too, about this energy argument that I hear over and over again, there's a lot of wasted energy that is leaked out through transmission of energy, and Bitcoin taps into a lot of that wasted energy. And then also Bitcoin miners, they have a financial want to lower their energy costs of mining, because the more they pay for electricity, the less profit they make. This is why we're seeing a lot of these Bitcoin miners go into sustainable green hydroelectric and solar powered energy for Bitcoin mining. So yes, Bitcoin does consume, of course, but when it comes to the type of consumption that happens in other industries like gold mining, flying planes around the universe, sending rockets to Earth, electric cars, Bitcoin is a blip on that radar, a small percentage. So it's not a good argument, and it's one that's been rebuked over and over and over again. There's tons of studies about it, and you're going to see those energy levels from Bitcoin mining just start to drop and drop and drop as more ways of finding cleaner energy and cheaper energy come into the mining of Bitcoin. So yes, let's talk about fees, and then we'll do a little Q&A, look at your comments. I get asked all the time, again and again, where's the cheapest place to buy? So this is the website. It's comparefundplatforms.com. This is one that I've used a lot when I used to buy individual shares. Now, obviously, the cheapest way you can do it is through trading 212 at the moment. There is currency FX fees with that they introduced a couple of months ago, which makes it a little bit more pricey. But it's still cheaper than buying it through a trading platform in some cases. If you're buying UK shares, you are going to get a better deal on trading 212. But if you don't want to do that and you want to use different platforms to buy shares on, go to comparefundplatforms.com and you can decide whether you want to use ISA, Junior ISA, SIP, or Direct. So I'll just show you how this works. You select whether you wish to hold funds. That's like index funds, unit trusts, things like that, not ETFs or shares. So I hit yes. Let's say I put in £1,000 lump sum invested, and I want to save £100 a month and put it in an index tracker. Say I want to buy 2 index trackers a month, and that would be 12 trades total a year. Select whether you wish to hold shares. I'll show you this in a minute. I'll just show you the funds. So you can run for the amount of years that you want. So let's put in 20 years. Average return, we'll just leave it at 7%. And this just shows you here the different platforms and how much making 12 annual trades a year to buy something like an index tracker or a unit trust is going to cost you. So you can see here, Charles Stanley, it's going to cost you over 20 years, £2,242, 0.35% a year. So I think that's an interesting way to look and get the lowest fee you can. You can see the most expensive down here would be Interactive Investors. We got Halifax Share Dealing. We've got iWeb. You can see it makes a pretty big impact if you go from the cheapest, which is Close Brothers, £1,612 in fees over those 20 years, versus down here the most expensive. You talk about £10,239 in fees. So, it can really make a difference in what looks like a small fee for every time you buy something on one of these platforms. Even AJ Bell is up here at 3,855 pounds. But that's a big difference. You're talking about almost 8,500 pounds in the fee difference over 20 years, and that's on just 100 pounds a month and 1,000 pounds individual sum. Now, if we change those numbers, let's say we put in 1,000 to start, and we were putting in 1,000 pounds a month, you're going to see those fees just really rocket. Look at that. So 5,000. Then Interactive Investor then becomes the cheapest because you're putting in more. iWeb then, this is one I used to use. It gets pretty cheap, but you start to get down here. Hargreaves Lansdown, it's going to cost you just a little bit over 24,000 pounds in fees to make those purchases throughout those 20 years. So you're best to stay away from, I've always said companies like Charles Stanley, you're going to really pay through the nose in fees to make trades. Let's see how much if you were to add shares into it. Let's say we did, let's change this around a little bit. So we'll do 500 in unit trusts, and then we'll do 500 in shares. So if you're a share buyer, let's do 1,000 start, 500 pounds a month. So we buy 5 shares a month, 12 times. How much? Yeah, did I do that right? Hold on. Yeah. Look at the fees. Look how much you're going to pay. AJ Bell, almost 20 grand. Hargreaves Lansdown, 23,000. iWeb, 23,000. All the way down to Mr. Charles Stanley, 45,000, and Strawberry, 55,000. This is how much money you're going to lose to fees buying this way. Even on Fidelity, 26,000, because Fidelity is going to charge you for every single one of those stock purchases. So trading 212 is going to work out a lot better for you to get those fees as low as possible. Now, I've always said I recommend just going straight to the source. If you want to buy an index tracker, just go straight to Vanguard. You're going to pay 0.2% for anything under 250,000 and 0.15% for anything over 250,000, capped at just 375 pounds in fees a year. Then you're going to pay a fund fee on top of this, but they're very low. Some of the fees are 0.05%, 0.10%, so maybe 0.3% in total. Fidelity, a little bit harder to find on their website, but you can go under services, and then where is it? Here, fees and charges under our accounts. You can see here how much you're going to pay. It's never clear. That's the one thing I really hate about these websites. It's never easy to find, and it's always in small print, but you can see everything here on their website is typically 0.35%. That's their platform fee, and it can be as low as 0.2%, but this tends to be what I found it to be an average. And then you got to pay the fund fee on top of that. So if you're buying unit trusts that have a 1% a year fee, you're going to be paying 1.35%. So that's why I always say keep the fees low. You want to keep the fees as low as possible. And then if you want to buy shares or ETFs, you're going to pay £10 for Fidelity. So that's hence why you see these fees down here for Fidelity so high. You just don't want to do that if you can avoid it. Those £10 here and there really adds up. As you can see, 26 grand in purchasing fees. So again, if you're looking for a good platform, comparefundplatforms.com is a really good way to do it, and you can really tinker those numbers and see what's the cheapest way for you to buy your investments. As the lower the fees, the more money that goes into your pocket. So hope you enjoyed that little explanation of that. We'll do a little Q&A and then we'll get off of here because we've already been 58 minutes. Guess we're not going to make the 1 hour. If you have questions or comments, put them in there. And Stephen Hale from Nottingham is here raining. Mike Powell said that the oil pipeline was not a hack. That was a complete joke. It was an open access database for those data points. It wasn't a hack. That's complete nonsense. Again, this is why you have to be very careful what you read in the news, because there is a lot of fake news out there. I still, again, don't believe that there was a $5 million ransom paid, but I guess we'll never really know the truth about that. You can probably find if there was 5 million in Bitcoin paid, if we knew when it was, we could look on the blockchain ledger and see. But we'll see. George is in Bridlington. You are late. You're okay. You don't have to apologize. John Morgan said, if you transfer 212 to eToro, we could follow your portfolio from $500. Would be fun. Yeah, I guess I could. I could do that. The only thing is I don't really want to pay the tax, because when I sell it, I'm going to have to pay the gains tax on it. So I'm trying to wait on that. But, you know, we'll see what happens in the future. Aki Chat, bloody China's fault. No, and then this whole thing about China too, that's been in the works for the last 3 years. I've been reading news about China's crypto ban, and they just want to create their own digital currency, so they're going to tighten up their rules and restrictions. But I've always said, you know, if China goes out of the crypto market and bans Bitcoin, it wouldn't make any difference to me as a holder. Bitcoin will survive and continue to grow. Tim Porter says Elon is going to get himself another SEC investigation. Probably. Robert, is your Coinbase versus Coinbase Pro clip available on how to save on fees? Yes, it's on the channel. I'll put a link up for you. It's up there. I just recorded a video too on how to purchase on Binance, which actually has lower fees than Coinbase, but it's kind of a pain to. There's a really, at least on the Binance.us, it may be different on Binance.com. But if you just want to see your profit and loss on each individual coin, they don't show you that, and it's hard to track it. You'd have to track it manually. So I'm not a big fan of Binance, and just even something so small and simple as being able to look at your profit and loss on a single coin, if Binance doesn't offer that, which is crazy to me. But here's the link to the Coinbase tutorial if you want to watch that. You can see how to buy coins for cheaper using Coinbase Pro. Yeah, 40 watching, please hit the thumbs up if you can. I appreciate that. I appreciate the thumbs down too. I always try to make the stream as informative as possible. Funding secure, not making any further distribution due to Quist closed trust claim. Probably counts as news. And yes, I will link the fee to the comparison. Let me find that. Where does it go? Here's the link to the comparison website. That's where you can look at the comparison website, comparefundplatforms.com. Very simple site. You know, its accuracy, I think it's pretty accurate. Again, you want to do your own research just to make sure, but it's a great little resource tool. Why did the ransomers demand Bitcoin? It can be traced. Why not request Monero, which is totally untraceable? Sounds like amateurs. Again, that's why I don't believe the story's 100% accurate. I think that's a great point. Why would you not request to be paid in a privacy coin? It's a good question. And why 5 million? Yeah. Tim Porter says, if you move trading 212 to etoro, I don't think you pay tax. No tax on CFDs anyway, even if it wasn't a CND, then you don't pay if you rebuy within 30 days. Oh, okay, well, good. Maybe I'll do that. I'm definitely not a tax expert. I try to, that's what my accountant's for. I just give everything to him. But yeah, I could switch it over to etoro, maybe. I gotta look at their website, get my head around it. Tony said, for property peer-to-peer, what do you think about the worldwide shortage of building materials? Many delays. Yeah, I think that's going to be a continued problem. There was a report in the US this week about the housing market starts, which is building starts, were down quite considerably. That was, again, because it's very hard to get materials. I got a couple of friends that are building houses right now, and the price of lumber is just shot up. But I think too, within 6 months, that will hopefully start to wash out. People are very savvy though when it comes to buying things that they need. They usually will. And then if the building material prices go up because of the shortage, then just the cost of the houses will go up. The Coinbase link has been replaced by fund platform link. I don't know what that means, Robert. Let me check again for you. Let's see here. Where is the Coinbase? If you go on the channel, Robert, and just type in Coinbase Pro versus Coinbase, you will be able to watch the video, but I'll put it in the chat here again for you. So you can watch that. Let's see. Any thoughts on connective lending? Let's have a look. Connective lending. Maybe I'm connective lending, asset and property lending. About us. Are we regulated? Yes. Our team. Norman Akram. Well, look. So this is one of the guys who was a funding secure guy from back in the day. I don't know what his involvement was as far as the downfall. I'm presuming I know he left a while ago, but it does lead me to be a little fearful. I gotta tell you, these photos look like mugshots from I mean, they look like mugshots from a prison or police record. This guy looks like Christian Henry. He came out of a mob mafia movie. So that's just me being judgmental. But I don't know anything about this business. Says he expanded Alma Grove from one shop front in Bournemouth to 4 shops in Poole, Southampton, and the Isle of Wight. Okay. You'd have to have a pretty good case for me to invest in a new peer-to-peer lending company at this point, due to all of the fallout. And I don't know if this is enough for me to take a fly on this anymore. Yeah. Maybe in the future. Maybe I'll get a chance to talk to these guys. I'd actually really like to get Fraser Funhead to come on here and explain, what's going on at the house crowd. We'll see if that can happen in the future. Mark says, do you still think the US equity index fund on Vanguard is a good place to put money? I'm going to start placing money in an index fund. I'm wondering whether it's the best place being at its peak. Yeah. I mean, honestly, the best way to do it is cost average in. You can, put in a little bit each month or each week, spread it out, so you're going to buy through the highs and lows, because we don't know where the peak is. We really don't. We've seen this huge run up at the stock market. Of course, everybody's saying, well, we're going to have a market correction, but when that occurs, who knows? So if you dollar cost or pound cost average in, just buy every month, and the market does fall, you can keep on buying. Do I think it's a good place to invest money? I think that the US is a good place. Yeah, I do. I think you've got, companies here that are not going anywhere. They're US market companies that are world leaders in technology. Do I think it's the 100% best place? I think there are other places you could find to diversify into. I think a world tracker is totally fine too. But I continue to still invest in the Vanguard US equity tracker. I will not be taking any money out, and I'll continue to put money every month into that track. I don't think Google is going anywhere. I don't think Facebook, Amazon, the big companies are Apple, which make up the majority, about 19-20% of the overall entire broad market. These companies are staple companies, and that's the one thing when you invest in index trackers. You're looking at what companies. Obviously, there's thousands of companies inside the tracker, but what companies are making up those trackers? What are they weighted at? And the top 10 companies. Let's have a look. Let's have a look what's in the Vanguard US equity tracker right now. Let's see. There's just no way to time it. You could sit on the sidelines for years waiting for that drop to happen, to say, well, I'm just going to wait. I waited for 5 years in cash. I didn't have it all in cash, but I had a decent chunk in cash waiting for the market to drop. And then what happened, of course, in March of 2020, when it did drop, I didn't know when the bottom was going to be, so I got scared. When the Dow was at 18,000, I thought it was going to go to 12. I just couldn't see any possible way that the Dow was not going to keep going down because of what was going on with COVID, and that didn't happen. And then, of course, I missed that bottom point, and then I ended up not going in, I think, until the Dow was back to 25 or 26. So that's the problem. You just don't know. Your emotions take over. If you're a cryptocurrency investor, how did you feel 2 days ago when that crash happened, where some of the coins lost 50% of their value? Were you ready to jump back in? Or was the brain going, I think the coins could go down another 25%. I think Bitcoin could dump another 15%. Is now a time to buy. And the emotional side of that is intense, and it's very, very difficult to time that out. What I ended up doing with the Bitcoin was I just bought when the market, I bought the dips. I held on to what I had. Is that optimal? No, it's probably not. Probably moving in and out of the market, selling on the highs, buying on the lows is optimal, but I'm not a professional trader. And a lot of professional traders got really hurt too, trying to buy those dips and sell on the highs. So I think you're better just to take a steady investment plan and just stick to it. Just keep buying and buying. You're not going to get the highest returns that way, because obviously trading in and out you're going to need a lot of luck. Or you could wait and sit on the sidelines and get zero return on your money. As your money loses value to inflation, you can sit on the sidelines. Who knows? The drop could happen tomorrow. It could happen in 5 years. We don't know. But I think it's a great place to put money. So if we look at what makes up this US equity index fund that I talk about, by the way, you can get it in accumulation or income. They have those two share classes. But you can see in the stock 3,746 stocks inside this fund. And you can see the top 10 made up of the percentages here. You got Apple, Microsoft, Amazon, Facebook, Alphabet, which is Google, Tesla, Berkshire Hathaway, JP Morgan, Johnson & Johnson. So that's the staple top 10 of the broad market that this fund tracks. So you got about 5, 9, 12, 13, 14, 15, 16, about 20% of the market is made up by these staple companies. I don't think these companies are going anywhere. Johnson & Johnson, they're not going anywhere. Google's certainly not going anywhere. Facebook's huge. Amazon is killing the world. Microsoft and Apple. You go down to page 2. Visa, Nvidia, Home Depot, Walt Disney, MasterCard, Procter & Gamble, Bank of America, PayPal, Comcast, United Healthcare, Adobe, Exxon, Verizon, Intel. This is what you're buying when you buy this fund. You're getting all of the exposure to all these different stocks. Pfizer, Pepsi, just keeps going. McDonald's, Nike, Goldman Sachs, American Express, 3M. You're getting this exposure. So if you think these companies are going to do badly in the next X amount of years, then I guess you could look for different places. You could look at Asia if you think Asia is going to be a better place to grow. You think the UK, you think the FTSE 100 is going to do better. You can look at that. I don't. I think the FTSE has been lagging behind for a long time. I mean, this is just where I believe things are going to go well. You can get this in an income share class too, by the way. Distribution, you're going to get a small yield, 1.15% gross. This is not something that's going to pay you a huge dividend, but you do get a 1.15% yield on the income class. And if you take the accumulation, you're going to get a 1.13%. So not much difference. But here's the thing, these fees. Look at the fees. 0.1% a year. Super low. That's why I like them so much. If I was going to go Fidelity, I'd look at the Fidelity World Tracker. So you can take a look at that. So yeah. But do your own research. This is not financial advice. This is just what I do and what I've been doing for a long time. I understand about the positivity of the lockdown in the UK and stuff, but again, I just look at history of what the FTSE has done, and it's grossly underperformed the rest of the developed markets for a long time, especially the US. Yeah. Can we get someone on from a cryptocurrency? Yeah, possible. Possible. Elon Musk coming to the UK shortly. Maybe he will tank the UK market. I'm in crypto also. I've held off, should have bought the dip. But as you say, I'm no trader. You see that again, you didn't know, right, Mark? You just didn't know when that point was to get in. The point would have been to get in at the downfall. Some of those coins were absolute bargains. I mean, we'll take a look at Polkadot, which is a coin that I really like. If you just look over the last, we went from a high point of, in the last 7 days, 48 US dollars, more, almost 50, right down here to 19. I mean, what a bargain. You pick these coins up at. If you had the steel balls, excuse my language, to go in after this massive drop off. Now you saw a big pump back up again back to almost $30. So, and then back down again. So yeah, buying the dips is the smartest thing if you have the courage to do it. A lot of people don't, and some of these coins again are high risk coins. There's no guarantee these coins are going to do well. You know, Binance coin. This was a great time to get in. Seeing these highs at over $600 US, you're able to pop in down here, just under 300 US. It's a great buying opportunity of 50%. Now back up to 393, you would have, 30% on your money. Where are you going to get those type of returns? But you got to be able to stomach the risk of what these are. A coin like Binance, I wouldn't mind taking that risk because I know what the company does. I know how they generate money. Binance coin is a use case. It's being used. Binance is a huge platform. If we look at the exchanges here, see Binance, $80 billion of volume has occurred in the last 1 day, right? So imagine every single one of those trades is being used. Binance coin is being used to pay for those fees. So it's a use case. Look compared to Coinbase, 14 billion dollars in the last 24 hours. It's huge, right? I mean, Binance is dwarfing Coinbase as a platform. They're generating all of these fees through that coin. So if you have the know-how and you're a long-term believer in this crypto stuff, then buying the dips is for the win. $200-day MAs, that's moving averages, seem to be critical in crypto, but with these crashes, most of the exchanges went down, so you couldn't buy if you wanted to. Yeah, I found it wasn't as bad as the last time this happened. I was able to get on Binance pretty easily, and Coinbase was down a little bit, but I still was able to get on there. So I think they've really put a lot of money into their website infrastructure to make it able to handle the loads of the trading that happened at the time. But another thing you could do is just go in and set limit trades in Coinbase Pro. And if the crash happens, then those trades will get triggered automatically. So, but what do I think in the future too? I think that I wouldn't be surprised if Bitcoin dumps to 20,000 US dollars and we see more of this. I would certainly be loading up at that point if it happened. You keep reading out deleted messages. Doesn't your feed show they are deleted? No, it does not. It just shows them up here. It doesn't show they were deleted. Nationwide are offering 2% on a current account at the moment. Hopefully it's a sign that things will be picking up in the UK. Yeah, maybe. Isn't there always restrictions on those accounts? So like the amount of money you can put in? I don't know. Let's see. Nationwide. Let's have a look. Yeah, so to earn 2%, interest on balances up to £1,500, you need to pay in £1,000 a month. So you're going to get 2% up to £1,500, and it's basically nothing. So I don't think you're really seeing much of anything. Right here it says after that you'll get 0.25% AER gross variable. So that can change. So you're getting 2% up to £1,500, and after that 0.25%. So no, I don't think that's a sign of anything at all. I don't think those rates are changing much. with your preferred index fund for regular investing, is there a good or best time to buy in the month? I could probably research that. From what I remember, buying in the middle and at the end is not a bad time. At the beginning of the month, honestly saying that, I don't think it really matters. I think it's very random. I do know sometimes buying shares at the middle of the day is better than buying them at the beginning when the market's first open, because you tend to see a lot more volatility. But I've never really paid much attention to buying the index funds at any particular time. I just have the money automatically go in every month and don't worry too much about it. Mark says he's in Ether, Litecoin and Bitcoin. John, Ether and Bitcoin. Please can you do a video on limit trades on Coinbase? Yes, I can. Don't blame your wife for giving you the interest misinformation, Aki-chap. She will probably do something nasty to you. Remember the Icelandic banks at 7%, a distant memory. Yes, you will not be seeing anything like that again for a long time. I think if the best case scenario you could see is maybe the interest rates going back up to 1.5 through a bank. It just hardly seems worth it. It's just such a poor amount that if you're putting in, even if you were to get 1.5% interest now at this point with inflation, and inflation probably over 2%, gonna go higher, you're essentially just losing money. And if you don't need that cash, then there is no reason to be having any large amount of money in a bank account anymore. It really isn't. You just gotta, I think, take the risk and even just invest it. Even if you put it into a lower risk dividend stock or something like that. I mean, I just put it all in index trackers, but yeah, the bank is just not going to do well for you. And to be honest, I think banks are going to be a thing of the past. It's going to take a while, but with blockchain coming, and we're going to have disruptive banks that are going to take over, I think your high street bank is going to really suffer. And what's going to happen in the future too with smart contracts, if you hold money, you're going to be able to lend money to individuals peer-to-peer. If somebody needed to borrow money on a house, you can use a smart contract to facilitate that legally and do your own lending. We don't need the banks anymore. We don't need the banks. When was the last time you went into a bank? I can't remember the last time I went into a bank. I barely use an ATM. Just really for a bank card, right? That's it. Yeah, Mike makes a good point. You should have 6 months of cash in your bank account. 6-month emergency fund, which you calculate through your expenses. So if your expenses are £1,000 a month, you need $6,000. It's 2,000, you need 12. Holding any more than that in cash is just silly, because inflation is going to become a problem. This is one of the reasons why Bitcoin is around, to stop inflation. Yeah, and Dave, you make a good point too. He said, I do not keep 6 months of money in the bank. I feel quite comfy. Well, it depends on everybody's individual situation is different, right? Some people have income coming in every month that they can rely on. So maybe they don't need to have as much as 6 months. Maybe it's 3. But if you invest that money, you can always sell it. You can always sell your investments if you needed the cash to get out. If you just needed a few grand. So there is a case for that. Putting it in an index tracker and then just selling it if you need it. You just hopefully you don't happen to time it on one of those, like it was in March 2020. I think we're going to have a good year as long as the governments continue to prop up the money printing. And the thing isn't, can they stop now? That's the question. Can the Fed in the US and the UK government stop printing money? If they do, what happens to the economies? Like, does it go crash? Can they afford to take that risk? Do they dial it down? It doesn't look like the money printing is stopping anytime soon. Let's have a look. Let's see what the debts are. This is a very interesting website. This is called the USDebtClock.org. You can see the country's national debt. This is the money printing that's going on right now. US, of course, leading the way with $28.3 trillion of national debt. Then China, Japan, Germany, and the UK with 3.6 trillion pounds of debt. This is a huge problem that is just being swept under the rug day in and day out. Absolutely crazy. So USDebtClock.org if you want to look at that. This is why we need assets like Bitcoin to invest in, because that national debt, not only in the UK, but every country is having this problem. France has it. Italy has it. India, Germany, Japan, China. This is a huge problem, because when the money printing stops, what happens to these economies? What happens to the currency? We've got to have other alternative ways to put money in. And people look at Bitcoin and say, well, it's so volatile. It's so volatile. Yeah, right now, because we're in its infancy. We're 10 years into a new type of asset class a lot of people don't understand. But will it always be that volatile? I don't think so. I think it will start to settle. And we'll have a new asset class that will battle inflation, that will battle the government's printing all of this money. We'll see. There's no guarantee. I could be completely wrong, but I don't think so. I don't think so. Mark says, have you looked into lending out your Bitcoin to gain interest? I've seen some platforms offering this, but it looks risky. I need to look more into this. Yeah, so this is called staking. You can stake your cryptocurrency. One of the big companies right now is called BlockFi. Let's have a look. So you stake your Bitcoin. So let's say you staked 1 Bitcoin. So that would be equivalent of about 40,000 US, about a little over 30,000 UK pounds. You stake it for 5 years. You're going to make $7,670 in interest. So it seems like a good idea, right? Can earn up to 8.6% APY. You can also get loans this way. Now, what concerns me about this is your cryptocurrency safe? What happens if BlockFi goes out of business because you are giving them the control of your cryptocurrency? So Bitcoin's up to 5% APY. Ether 4.5% APY. You can get up to 6%, I think, on Ethereum through Coinbase. That I think I would be more comfortable doing it that way. But you just have to remember you are going to be locking in your coins when you stake it. So, for instance, Ethereum is going to be a proof of stake. Currently, it is a mined coin like Bitcoin. There's going to be a proof of stake. So, if you do want to get that interest, you're going to lock in your coins. From what I understand, Coinbase is trying to figure out a way for you to trade or liquidate stake coins, but there's still a bit of a question mark over that. However, I'd be very wary about giving my coins to one of these third-party companies to get interest on it to stake it. Because if something does happen to that company, I'd be concerned about, let's see, security. What does it say? I want to. Let's Google what happens if BlockFi goes bankrupt. See what people say on Reddit. Just curious, if you deposit funds in an interest account, BlockFi goes bankrupt, what happens? No, that's not what we're looking for. So we can see here, again, BlockFi is just one of the biggest ones that I know of that you can stake your cryptocurrency for interest. But it says here, BlockFi is essentially a modern day crypto bank without insurance. That's what I would be concerned about. Coinbase operates an exchange for both retail and institutional clients. So I would be more comfortable staking my cryptocurrency through Coinbase than I would BlockFi. You just got to be very careful, because if something happens to that company, then your cryptocurrency could very easily go bye-bye. That's not what we want. We don't want that. Dave says, shares are very easy to sell. I have some in Loanpad, a Visa credit of £8,000 with regular dividends coming in. Okay. Yeah, good thing about shares, if you need the cash or an index tracker, you can liquidate. Very liquid. So, all right, we've been going way too long today, an hour and a half. Thank you again for joining me, everybody. Please subscribe again. Hit that like before you leave if you can. We'll be back next Thursday. Don't forget, June 6th, supposed to have Peter Reed from Assets Exchange on, which is the Assets Capital side little business of the property peer-to-peer side of things. And we'll have Peter on. He'll explain exactly what Assets Exchange is and why you might want to consider putting your hard-earned pennies into Assets Exchange. But we'll be back next Thursday, of course, the universe willing, 7:30 p.m. same time, and we'll chat about everything going on in the investing world. I hope you enjoyed it. Take care. We'll see you next time. Be safe out there, and hopefully you get some good British weather and enjoy the sunshine. Have a great evening. Take care.